Now we have all our journal entries done, we can start filling out our T accounts. I've already filled out the T accounts because it's a very time consuming process, but I will talk briefly about the best way to use Excel to fill them out. In your template for your test, you're going to have T accounts for all of the accounts that you use. Best way to get about it is to go through your journal entries and see what is in them. In this case, in our first journal entry, Alpha Corporation issued common shares and they got $600,000 in cash. It was debited, so we go to the debit or left side of our T account. I would hit equal. I would click the journal entries tab. I would click the amount of the debit, which was $600,000, and now we know we're ready to copy because this little green line spinning around it. We hit enter and it brought the $600,000 over. Same thing for our next entry. In January 3rd, we issued preferred stock and got $300,000 cash. So I would click on the January 3rd entry, I would equals, I'd come over here to journal entries, click our cash debit, so on and so forth. And I just went down the line, started with cash, every debit that we had went in the left column, every credit we had went in the right column. I repeated this for every single account that we have. To find the balances, it's simple enough. Whatever the natural balance of an account is the first side that you add, and you subtract out the other side. Cash as an asset has a natural balance on the side it increases on, which is the debit side. So we would hit equals the sum of all of our debits, which is the B range. You can see up here in the formula bar, I hope you can read this, it equals sum of B2 through B12. We would subtract out all our credits, which would be the sum of C2 through C12. The same thing would happen over here with all of our other accounts. Some of our accounts will be credit balances. Premium on bonds payable, premium on bonds payable are both liabilities. They would have a credit balance, so you would add the credits, as I did here, and subtract out the debits. Scroll down really quickly so you can see all of the balances that we have. One of them is going to be a little goofy right now, which is retained earnings. Don't worry about it. We'll fix it when closing comes after we fill out our financial statement. So let's get started with that. We're going to start with our income statement. Some numbers are given to you, like net sales, cost of goods sold. Same is true on your tests. First thing we have for our blank is we have to figure out what gross profit is. Well, gross profit is just net sales minus COGS. So if we hit equals net sales minus our cost of goods sold, we're going to come up with our gross profit, which is a little over $999,000. Next up, we have our operating expenses, the expenses that are typical of our business that we're going to pay each and every month. We're going to separate them into two categories called selling expenses and administrative expenses. Maybe you're thinking, hey AJ, where's rent expense, advertising expense, all that stuff. Companies usually have so many expenses that they don't report all of them. Instead, they group them into categories, selling and administrative. I gave you the total for both of them, so our total operating expenses over here is just the sum of our two different categories. Operating income is equal to gross profit minus total operating expenses. So if we hit equals, click the amount of gross profit we had, and subtract out the amount of operating expenses we have, we see that Alpha Corporation has $149,300 worth of operating income. Next spot is our other revenues and expenses, the first one being interest revenue. So for interest revenue, we have a T account for this. We're going to hit equals. We're going to go to our T accounts and find out what the amount of interest revenue we had was. Well, so we can see over here, our balance for interest revenue was $625. Let's click on that balance, get the little green line spinning, and hit enter, and it brings the $625 over to our income statement. Next up, we have dividend revenue. Same steps. We're going to hit equals, click on the T accounts, and we're going to go find dividend revenue. Once I scroll down, we'll find the balance of that being $2,000. We hit enter, brings that over. Gain on investment sale. Gain on investment sale goes under other revenues and expenses because it's for Alpha Corporation, not part of their normal business activity. They're a widget making company and they're not a brokerage firm, so they're not in the business of buying and selling investments. It just happens to be something else that they did, so we report it in others. We hit equals, we click on T accounts, and we find the balance of that to be $25,000. Next up, we have interest expense, and our interest expense is equal to our $1,300 balance. Interest expense obviously subtracts from income, like all expenses will. Well, we don't want to be in positive when we add this up. So the best way to go is to go up here into your formula bar, and between the equals and where it says T account right after the equals, put a negative. And when we put that in, it's going to list it in brackets as a negative number. So now we're going to have our income before income taxes. Well, what is that equal to? That is equal to our operating income plus the sum, open a parenthesis, of all of our others, as I will call them. Close the parenthesis, and we hit enter. We come up with $175,625 that Alpha Corporation had in income before they paid income taxes. Companies pay their income taxes after all these other things have been calculated in and whatever their predetermined tax rate is. Well, up here in the description, it says that Alpha pays a 20% tax on its income before income taxes. So to figure out how much income tax they had, we hit equals the amount they have to pay tax on times their tax rate, which is 20%. So let's call it 0.20. Means they have income tax of $35,125. Same concept here. We're going to want this number to be negative. So the best way to go about this is to hit a negative and then put the rest of your calculation into parentheses. Now we have negative $35,125. Net income is going to be equal to our income before income taxes plus the negative amount of income tax expense we have. I know that's kind of goofy, it's how presentation goes. Regardless, we ended up with net income of $140,500. After we finish the income statement, we get to move on to the statement of retained earnings. It is given up in the top information that Alpha had a balance of 0 on January 1st, so we can put the number 0 into our spot here. Excel, the way I have this formatted, we'll just leave it as a dash, that's fine. The next thing we need to do is we need to add our net income for the period. Well, that's easy enough. We hit equals, and since we just figured it out on the income statement, we click the amount of net income we had, $140,500. Next up, we have our common dividends declared during 20XX. Well, the best way to find this is to go to our T accounts, and here we have our dividends payable common. Each time we declared dividends, we credited a liability, dividends payable. We don't want the balance. We don't want the $24,000 balance. We want to know how much we declared in dividends to our common shareholders during the period. Well, as we can see here, we declared $25,000 on 6/15, and we declared another $24,000 on 12/15. That's both of our declarations. The fact that we paid off $25,000 of that doesn't matter for this particular part of the statement of retained earnings. We only want to know how much we declared. We declared $25,000 plus $24,000 is $49,000 worth of common dividends during the period. We're going to do the same thing with preferred. We're going to go back to our T account. We're going to find our preferred dividends payable, which is right here. We declared $7,500 worth of preferred dividends on both June 15th and December 15th, which means that in total we declared $15,000 worth of dividends. So for our retained earnings during the period, the formula that always gets us here is it is equal to the sum of our beginning retained earnings plus the amount of net income we had during the period minus the amount of common dividends we declared plus the amount of preferred dividends we declared. And in total, Alpha Corporation had retained earnings of $76,500. Now that we have our retained earnings balance, we can go back to our T accounts, which I already had the formula filled in. We see that we had retained earnings of $140,500 being our net income to start with, and since we paid $64,000 worth of dividends, we're going to end up with ending retained earnings of $76,500. through 2 statements. Means we only have 1 statement left, and it is the balance sheet. Good news for you guys. The balance sheet is pretty easy to go about. It's just a whole lot of clicking on the balances of your T accounts. Cash had a balance, if I scroll up, of $998,425. So we bring that on over into our T account. Next current asset is equity investment. So we hit equal, we go to our T accounts, we find the balance of equity investments, and that balance happens to be $15,000. The balance of our other current assets was given to us at $62,200. So our total current assets, which goes in the right column, is equal to the sum of these 3 numbers, which is $1,075,625. For our non-current assets, our plant, property, and equipment, our long-term investments, everything like that, I gave you building plus its accumulated depreciation. This number was given. The only non-current asset we need to transfer over is our HTM debt investments, because we're planning on holding that bond we invested into maturity, so it's non-current. We go to our T accounts and we find HTM debt investments, which has a balance of $25,000. Well, we go and we take the sum of these 2 numbers, the carrying value of our building plus our long-term investment. We're going to come up with $249,800. So for our total assets, since it's our only 2 categories, it is just equal to the amount of total current assets we had plus the amount of non-current assets. We've got $1,325,425 in total assets. For current liabilities, accounts payable and other current liabilities are given to you. What we need is dividends payable common and dividends payable preferred. So we're going to go to our T accounts and we're going to find those balances. And the balances of dividends payable common is $24,000. We click on it, we hit enter, it brings it on over. Dividends payable preferred equals, we go, we click on the balance of that particular account, which is $7,500, and we come up with total current liabilities equal to the sum of these 4 numbers. That turns out to be $203,125. Stick in the center column here for notes payable. We're going to equal. We're going to go to the T accounts. We're going to find the balance of notes payable to be $50,000. Next up, we have bonds payable. And bonds payable has a contra account tied to it, premium on bonds payable. Well, as you can see over here in non-current assets, whenever there's an account that has a contra account tied to it, like building and accumulated depreciation on that building, those 2 accounts are listed in the leftmost column. So for bonds payable, we go and we hit equals. Our T account for bonds payable has a balance of $100,000. For premium, we hit equals. We go to our T accounts again. We find our premium on bonds payable to have a balance of $1,800, which means that the carrying value of our bonds payable is equal to our bond face value plus our premium, or $101,800, giving us total long-term debt equal to the amount that we owe on the note still, plus the carrying value of our bonds, which turns out to be $151,800. So now for total liabilities, we hit equals, and we add together our current liabilities plus our long-term debt. We come up with $354,925. Underneath this, we have all of our equity accounts, which is namely stock. And I don't know why this is typically formatted this way, but for the equity section, the information is usually always in the right-hand column the whole way down. So we start with the balance of our common stock account. We go into our T accounts. We find common stock to have a balance of $50,000. We click on it, we hit enter, and it brings that number over for us. Next, we have our paid-in capital in excess of par, or our PIC account. For common stock, we find the balance of that to be $550,000. Preferred stock is the next thing that's listed, so we hit equals. We go to our T accounts. We find the balance of preferred stock to be $250,000. We hit enter, and we bring that number over. We do the same thing with PIK. Just working our way down the line. PIK Preferred has a balance of $50,000. And lastly, we have our PIK Treasury account. So we hit equal, we go to our T accounts, and we find PIK Treasury to have a balance of $20,000. So for our total paid in capital, we hit equals the sum, open a parenthesis, of all of those accounts. We add them together, and we hit enter. Next up, we have treasury stock. Treasury stock is a contra equity account. It decreases the value of the company to our stockholders because our stockholders don't own the stock at the time, the company does, and we're holding it in treasury. So what we do is we hit equals, and since it's contra account, it's going to be negative. So equals negative to the T accounts, we find the balance of treasury stock. And at this time, Alpha Corporation owns $26,000 worth of treasury stock. And then lastly, we have our retained earnings. So if we hit equals, go to retained earnings. Our retained earnings now has a balance of $76,500, which again is the amount of beginning retained earnings plus net income we had, where the $140,500 came from, minus the $64,000 in total dividends that we declared. We bring that number over, and this is going to bring us to our total stockholders' equity. To figure that out, we hit equals, and we add together the sum of our total paid in capital plus the subtraction for treasury stock plus our retained earnings. Close the parenthesis, hit enter, and we come up with total stockholders' equity of $970,500. So to find our total liabilities plus stockholders' equity, we just hit equal total liabilities plus stockholders' equity, giving us a total balance of $1,325,425. And as you can see here, thank the heavens, our balance sheet actually balances, and we're through. Good luck on your test, everybody. If you have questions, don't hesitate to email me and let me know, or send me a message in the discussion board. I will be more than happy to lend my assistance.